Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss Schwab Mega Backdoor Roth, how to contribute $72,000 to your Roth IRA regardless of your income. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So this is our second daily Solo 401k webinar and Q&A session of the day. Here at My Solo 401k Financial, our goal is always to help you stop overpaying taxes and start building real retirement wealth. We try to do that through having these open sessions. So if you do have questions or comments, whether on this topic or really anything related to solo 401k plans, please don't hesitate to chat it over now so that we can be sure to get to them all. Okay, wonderful. So again, we want to talk about, in a nutshell, the fact that there are income limits above which someone is not allowed to make Roth IRA contributions. In other words, if you earn too much, the rules don't allow you to make Roth IRA contributions. But there's a workaround for those that are eligible to be able to make mega backdoor Roth contributions to a solo 401k where you could potentially contribute up to $72,000 for 2026 to the solo 401k and then transfer those funds out of the solo 401k to a Roth IRA. So we want to talk about how that works. Now, let's first lay the foundation. So a solo 401k is a retirement plan that is available to those that are eligible. You need to be self-employed with no non-owner, non-spouse, full-time W-2 employees in order to be eligible. So if you're eligible, that allows you to set up a solo 401k. And then if you set up a solo 401k plan like the one offered by my solo 401k Financial, you can take advantage of advanced features such as the ability to make mega backdoor Roth solo 401k contributions. So for example, for 2026, the mega backdoor Roth solo 401k contribution limit is $72,000 or even more if you're age 50 or older. And when you make a mega backdoor Roth solo 401k contribution, it's really a two-step process where you first make a voluntary after-tax contribution to the solo 401k, and then you can transfer those voluntary after-tax solo 401k funds out of the solo 401k to a Roth IRA, or you could keep it in the plan and transfer it to a Roth solo 401k. So the strategy that we're talking about here would be making a voluntary after-tax contribution to your solo 401k and then transferring the funds out of the plan to a Roth IRA. That's how you could potentially make a contribution to your solo 401k up to $72,000 for 2026 and then transfer those funds out of the plan to a Roth IRA. Now, again, the foundation is you got to be eligible to be able to set up a solo 401k just generally. That means you're self-employed with no non-owner, non-spouse, full-time W-2 employees. Then you need to find a solo 401k provider that allows you to make mega backdoor Roth solo 401k contributions. So for example, Schwab, Fidelity, Vanguard, E-Trade. So the basic brokerage platforms, they offer solo 401k plans, but they don't support the mega backdoor Roth. But many of those providers will open up accounts for people that bring their own plan documents. For example, Fidelity, Schwab, E-Trade. Now, Vanguard won't open up accounts for people that bring their own plan documents. They exited the solo 401k industry a couple of years back, so they don't even offer their own solo 401k plans anymore. But Fidelity and Schwab, those are definitely the top two options with our client base. And we are very hands-on in helping customers open up accounts at the bank or brokerage of choice. So it's going to make sense. Again, you're going to need to work with a provider that offers a plan that allows you to make mega backdoor Roth solo 401k contributions. So that means you need to find a plan provider that offers a plan that allows for both voluntary after-tax contributions and then in-service distributions. Remember, it's that two-step process. So you first have to make a voluntary after-tax solo 401k contribution in order to be able to make the higher contribution amounts, potentially up to $72,000, for example, for 2026. And then step two, you need to be able to move the funds from the voluntary after-tax solo 401k account either to a Roth solo 401k or a Roth IRA. So that's where you need to have a plan like the one offered by my solo 401k financial that allows for both steps. And our plan, again, would allow those after-tax solo 401k funds to be transferred out of the plan to a Roth IRA. That's how you can work around the income limit that applies to being able to make Roth IRA contributions. In other words, if you make too much money, you can't make Roth IRA contributions because there are no such income limits that apply to being able to make Roth solo 401k contributions. So even if you make a relatively high amount of income, self-employment income, there's no upper income limits above which you can't make solo 401k contributions. Now, at a minimum, you need to find a provider like my solo 401k financial that offers a plan that supports the mega backdoor Roth. But then on top of that, it's going to make sense to work with a provider like my solo 401k financial that has deep experience in helping customers make these mega backdoor Roth contributions, as well as provides the ongoing compliance support. Now, in terms of experience, we were the first solo 401k provider to offer a plan that supports the mega backdoor Roth. So no one has more experience than my solo 401k financial when it comes to making mega backdoor Roth solo 401k contributions. And that means that we've got deep experience in helping you through those compliance steps because you do need, it's important to deposit those voluntary after-tax solo 401k contributions into separate accounts. So we're very hands-on in helping customers open up the requisite accounts. And we're neutral as far as where those accounts are opened up at. So we're just a plan provider, meaning we don't provide accounts, we don't provide a holding accounts, we don't provide investment advice, we don't have access to our customers' funds. We're totally neutral, in other words, in terms of where those accounts are opened up at. So they could be opened up at Fidelity or Schwab or E-Trade, just to name a few examples. And we're very hands-on in helping customers open up the requisite accounts. So for example, if you want to open up the accounts at Schwab, we'll help you open up the accounts for your solo 401k. We're literally prepare the paperwork to open up those accounts. The other compliance piece in terms of making these mega backdoor Roth solo 401k contributions, right? Step one is opening the accounts. Then we're answering questions every day from customers in terms of how much they can contribute. But then there's another important compliance piece, which is when you make that after tax contribution and then transfer the funds either to a Roth IRA or a Roth solo 401k, that second step, that transfer to the Roth account needs to be reported on a Form 1099-R. And we handle that 1099-R for our customers for no additional charge. Our customers and their advisors just have to submit the information to us in a timely fashion. And it's easy to do that because we have an online form on our website where it can be submitted 24/7. It just takes a minute to submit it. Now, that first step, remember, it's a two-step process. First, you make a voluntary after-tax contribution, then you move the after-tax funds to a Roth account. The first step, when you make the voluntary after-tax contribution, that doesn't need to be reported on your personal tax return or your business tax return or your W-2. For example, if your business is taxed as an S Corp or a C Corp. But the second step, when you move the after-tax money to either a Roth solo 401k or a Roth IRA, that would need to be reported on a 1099-R. So it's important to work with a provider that's going to handle the 1099-R. Now, let's talk about the deadline. This time of year, as we sit in February 2026, a common question is, okay, can I still set up a plan, a new plan in 2026 and make these mega backdoor Roth solo 401k contributions. Remember, a mega backdoor Roth solo 401k contribution is really a two-step strategy. You're first making a voluntary after-tax contribution to a separate voluntary after-tax solo 401k account, and then transferring the funds out of the plan to a Roth IRA, or keeping the funds in the plan and transferring it to a Roth solo 401k. So now the funds can grow, you can invest with that tax-free growth potential. So if someone has not set up a plan by the end of 2025 and now it's 2026 and they want to be able to make after-tax contributions, the good news is that it's still possible to set up a new solo 401k in 2026 and make after-tax contributions for 2025. You would just need to set up the plan in time to open up the accounts and make the contributions by your business tax return deadline, including any timely filed extension. Now, if you want to make additional types of contributions in addition to after-tax contributions, right? Because our plan doesn't just allow for after-tax contributions, it also allows for employee contributions, also known as deferral elections, also allows for employer contributions. So if you're setting up a new plan in 2026, if your business is taxed as a sole proprietorship, let's say it's a single member LLC that's taxed as a disregarded entity, so it's also taxed as a sole proprietorship, you technically could still open up a new solo 401k plan in 2026 and still make all types of contributions, even employee, employer, and or voluntary after-tax contributions for 2025, provided that you would have to make those employee contributions if you're taxed as a sole proprietorship and you're setting up a new plan in 2026. You'd have to make those employee contributions by April 15th, 2026. Now, if you file an extension for your 1040, right? So your self-employed business tax return, which is your 1040, if your business is taxed as a sole proprietorship or you report it, your self-employment income, for example, on Schedule C, in that case, if you file a timely extension for that 2025 1040 and you're setting up a new plan in 2025, you can even make the employer and the voluntary after-tax contributions by the extended tax return deadline of October 15th. Now, if your business is not taxed as a sole proprietorship, let's say it's an S Corp or a C Corp or a partnership, and you miss that December 31st, 2025 establishment deadline, it's too late to set up a new plan in 2026 and make the employee contributions for 2025. But there's still time if your business is not taxed as a sole prop. Let's say, again, it's an S Corp or a partnership or a C Corp. There's still time to set up a new plan in 2026 and still make employer and or voluntary after-tax contributions for 2025 by your self-employed business tax return deadline, including any timely filed extension. So let's say your business is taxed as an S Corp and you're setting up a new plan in 2026. You could still set up a new plan and make the after tax, which is how you make the mega backdoor Roth, and how you could potentially get up to 72,000, where the funds end up in a Roth IRA, really 70,000 for 2025, since that's the limit for 2025. But you could still make the after tax contributions for 2025, or the employer. You would just have to set up the plan in time to open the accounts for the solo 401k and make the contributions by either March 16th. So again, your self-employed business tax return deadline, so the 1120S deadline, or if you file a timely extension for that 1120S, September 15th of 2026. So some folks say, well, I'm not interested in making pre-tax contributions. I'm only interested in making the mega backdoor Roth contributions. And that's fine. The plan would allow you to just make 100% voluntary after-tax contributions. And again, regardless of how your business is set up, if you still want to be able to make 2025 contributions, where again, the limit, it's not 72 for 2025, 72 is the limit for 2026, but it's still very high, especially relative to your IRA contribution limit for 2025, it's $70,000. So if you've got the income to justify it, a solopreneur that's eligible to set up a solo 401k because they don't have any employees working for their self-employed business, they could still set up a new plan in 2026 and make those after-tax contributions for 2025 by their business tax return deadline, including any timely filed extension in 2026. So those critical deadlines, again, it's always driven by your self-employed business tax return deadline, right? So that could be the 1120S deadline. If your business is taxed as a partnership, the 1065 deadline. If your business is taxed as a partnership, 1120S. If your business is taxed as an S corp, 1065 if the business is taxed as a partnership. If your business is taxed as a sole prop, then it's the 1040 deadline. Or if it's taxed as a C corp, then it's the 1120 deadline. So that's April 15th or October 15th if you file a timely extension in either case of the C corp or the sole prop. Let's go through a quick example just to understand that 100% after tax scenario. Let's assume the individual is under 50 years of age. They're setting up a new plan in 2026, but in time to open up the accounts and make the contributions for 2025 by their 2025 business tax return deadline, including any timely filed extension. So as long as they have at least $70,000 of self-employment compensation, they can contribute 100% dollar for dollar as a voluntary after-tax contribution up to $70,000 and then transfer those funds to a Roth account. It could go to a Roth IRA, including a Roth IRA at Schwab, or it could stay in the plan inside of a Roth solo 401k. And that the only exception would be is if that person is making contributions to a 403b or contributions to a 403b were made on their behalf for 2025 because of that 403b exception. The steps would be to make a voluntary after-tax contribution, could be to an account at Fidelity, could be to an account at Schwab. Then step 2, convert to Roth. Step 3, submit the form on our website to give us the information that we need to prepare the 1099-R. So even though that 2025 contribution might be happening in 2026, the conversion, of course, is not going to happen until 2026 either. And there's no deadline to convert from the after-tax solo 401k to either a Roth solo 401k or a Roth IRA. But most will want to move it over sooner rather than later so they can start investing inside the Roth account where they've got that potential for tax-free growth. It'll be reportable for the year of the transfer. So if the contribution is made for 2025, but in 2026, and then of course transferred in 2026, that 1099-R to report that after-tax to Roth transfer, that won't be issued until the beginning of 2027, like a 2026 1099-R issued by February 2027. And you can find the forms on our website to provide us the information we need to prepare the 1099-R quickly and easily. You can just go to mysolo401k.net/forms. We've got a visual here to visualize what the holding accounts look like. So in this case, there's one participant. They do have 3 different sub-accounts, right? One in the name of the plan for pre-tax solo 401k funds, a second in the name of the plan for Roth solo 401k funds, and then a third in the name of the plan for voluntary after-tax solo 401k funds. Here's an example with 2 participants, another visual. Now they've got 6 accounts, pre-tax, Roth, and then after-tax for each person for a total of 6. You don't have to have the Roth account. So if you want to transfer the money out of the plan to a Roth IRA, let's say a Roth IRA at Schwab, you could just have an after-tax account, transfer the funds out of the after-tax account, out of the plan to a Roth IRA. Now you might also have pre-tax money in there. Let's say you made pre-tax contributions, or you want to roll over funds, say from a former employer plan or a non-Roth IRA. Those will go into your pre-tax solo 401k account. Okay, wonderful. We appreciate the chance to discuss these topics. Thank you so much for joining. If this information is helpful to you, please take 1 second to like and subscribe. Liking will tell the platform that the content is valuable, which will help other solopreneurs, other advisors like you find it, who might be like you looking to secure their retirement future. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So please don't hesitate to subscribe on whatever channel you're watching us on, whether you're on YouTube or X or Instagram, etc. We also invite you to our community. We have the largest community of solopreneurs, solo 401k advisors, just folks that are interested in these topics. With over 30,000 members, we do have vibrant forums. We have a library of videos and webinars. So there's a ton of ways to learn, a ton of ways to share the knowledge. It's totally free to join. All are welcome. You can join quickly and easily at my solo401k.net/my community. So please don't hesitate to join. All right, well, that's it. It looks like for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.